Good morning friends. Welcome to my YouTube channel Advocate Amit Kumar Gupta. In my series on the income tax cases, the case which we will discuss today is SHRI JEEN Mata BUILDCON Private Limited versus Income Tax Officer. This case has been reported in 97 ITAT Tribunal at page number 706 and the matter has been decided by Jaipur ITAT, and this matter has been decided on 8th March 2022. Friends, the logic of deciding this particular case is that we have seen in our practice that whenever the assessing officer has any information in his hand, and especially through the sources of the income tax department like 26AS or any information from the investigation wing, then the department relies on that information as a gospel truth, and whatever the evidences are filed and whatever the explanations are filed by the assessee, in most of the cases the department do not consider that, and the assessee has to fight up to a level of the ITAT. Even the CIT appeals are not giving relief to the assessees. I do not know why this CIT appellate authority is there, because there is a rule that no one can be judged in its own case, and there is no doubt that the CIT appeal is also a part of the income tax department. The CBDT issues circulars from time to time to guide the CIT appeal, and we have seen in the recent past that one such circular was also quashed by the court in a writ petition, that you cannot give the points to the CIT appeal for making strong the case of the assessing officer. In this particular case, there was difference between 26AS income and the income shown by the assessee in its profit and loss account. When assessee was called for to explain this difference, the assessee explained that this difference is due to the reason that the assessee has taken that income in the next year, and it was a usual business practice that assessee was receiving the bills late. That is why the assessee took those receipts into the next year, and it was a general practice on the part of the assessee. When these explanations were filed before the assessing officer did not pinpoint any mistake in that, any error in that information which have been given by the assessee, but straight away the assessing officer made an addition into the income of the assessee of the difference between the 26AS and the income shown into the profit and loss account. The assessee went to the CIT appeal. CIT appeal also upheld the order of the assessing officer. So the assessee has to move to the Jaipur ITAT. Jaipur ITAT said that whenever there is any information with the income tax department, that doesn't mean that assessee has concealed his income, underreported his income, or misreported his income. If the assessee has explained beyond doubt the difference between the 26AS and the profit and loss account, or any difference which the department is alleging, then without pinpointing any mistake in that information, you cannot make the addition of the assessee. This was the point of the Jaipur ITAT. So Jaipur ITAT said that the assessee has taken whatever the difference is there into the next year, and it was a usual business practice which was going on consistently. So you cannot add the same income into the 2 years, and the Jaipur ITAT gave relief to the assessee. Friends, the point here is that whenever assessee is giving any information to the department, or when the assessee is submitting its submissions, then the assessing officer should consider them. Considering them doesn't mean that deleting the addition or skipping the addition, but at least before making the addition, the assessing officer should deliberate on that information which has been given by the assessee and counter that. But without countering, you cannot make the additions. So this was the crux of this case. The additions were deleted by the Jaipur ITAT. At the end of this video, once again I am repeating the name of the case. The name of the case is SHRI JEEN Mata BUILDCON Private Limited versus Income Tax Officer. Thank you, friends.